If you're a contractor or freelancer with a limited company in the private sector and are facing the prospect of operating inside of IR35, then keep watching. This video covers whether you can continue to operate through a limited company inside of IR35, an example of how a typical inside of IR35 tax calculation works, why would you use a limited company inside IR35, considering an alternative such as an umbrella company, and finally, what's the outlook for contractors and freelancers in 2021 and beyond. Hi, I'm Tony D'Angelo, the Accounting and Tax Academy, and make sure you subscribe for real quality advice from real qualified accountants. With the impending new off-payroll IR35 rules coming into force on the 1st of April 2021 in the private sector, many of you contractors and freelancers are being faced with the inside or outside IR35 dilemma. If you want an insight into the new IR35 rules, then click on the card above where we have done a comprehensive video that explains it all. What I'm going to focus on in this video is whether you can still operate through your limited company if one or more of your contracts is deemed within IR35 and how the calculations work. First of all, a reminder that the new rules do not come into play until the 1st of April 2021. So if you're watching this before that date, your IR35 status determination is down to you, the contractor, under the current rules. The short answer is yes, you can. IR35 is applied on a contract-by-contract basis. So whilst one contract could be inside of IR35, another could be determined outside of IR35. And you don't have to go jumping into an umbrella company if you accept an inside IR35 contract, unless, of course, your agency or end client insists you do so. So here's an example calculation that we've done for you to help you visualize how the accounting and tax would work for an inside IR35 contract through your limited company. In this example, let's assume you are working for an end client or agency through an intermediary, in other words, your own personal services limited company, and are paid monthly. Now, for the sake of simplicity, we are assuming the following. The employer's Class 1 national insurance has already been deducted by your agency and your day rate is net of this. Your company is on the standard rate of VAT and the inside IR35 5% allowance is being ignored just to simplify the calculation. Now, you've worked 21 days in the month and your total gross salary or income is £8,400 plus VAT. Your end client or agency will deduct at least a basic rate of income tax and employees Class 1 national insurance. That leaves you with a net income of £6,230. Be careful here because if you are a higher rate, 40 or 45% taxpayer, then you will have to pay the additional income tax through your self-assessment return after the end of the tax year. The VAT amounts to £1,680 and is also paid into your limited company by the end client or agency, but is dealt with separately and does not go through your income statement. It will form part of your VAT return, often done quarterly. You will literally take £6,230 as a salary to yourself, as this amount has already had income tax and national insurance deducted. It will not be subject to corporation tax or any dividend tax. So this is a very fair question, and I am going to provide you with 3 valid reasons. Reason number 1 is multiple contracts. If you're planning on carrying out multiple contracts, then operating through your limited company is tidier and viable. The key here is that some contracts will be deemed outside of IR35 and therefore the income and profits your limited company gets from these benefit from the full tax reliefs available for a limited company. And after the 1st of April 2021, if you get contracts in the private sector with small company clients, the new IR35 rules are exempt. Reason number 2 is an established trading history and credibility. If you've been running your limited company for a reasonable period of time, then it will have generated a trading history and more than likely credibility, particularly if you have reported consistent profits. This in itself creates a credit rating for your limited company and can open doors for borrowing funds, raising equity, and other business deals. Reason number 3 is a stepping stone to a small trading business. You may be looking to transition from being a contractor or freelancer personal services company to a fully operational small trading business. And you can use your existing personal services company to do this. But if you're going into a permanent role and are definitely sure that you will have no further use for your limited company, then you will want to consider either placing it in a dormant status or closing it down altogether. Now, we've made a video about dissolving a limited company. Click on the card above and you can watch this. An umbrella company is usually a short-term option. In terms of the tax and national insurance, they practically work in the same way as the inside IR35 calculation I provided earlier. Although an umbrella company is administratively simpler for you, the contractor, it does not have the level of flexibility of a limited company and will not accommodate outside IR35 contracts tax efficiently. Well, I don't have a crystal ball, unfortunately, but in the 20 plus years of being in industry and as a former contractor myself, I understand how medium to large companies, who are the biggest recruiters of contractors and freelancers, actually work. Now, their projects are often seasonal or cyclical, and invariably they always need temporary or specialist labor as a result. When I was working in the banking sector many moons ago, our department was 60% permanent employees and 40% contractors. Now, this kind of mix is common in the corporate and business world, and commercially how most medium to large employers need to actually structure. What's more, we have witnessed an abundance of inside IR35 contracts springing up. So in my opinion, contracting will continue to remain abundant in the future, although now there will be a balance of both inside and outside IR35 contracts. What are your thoughts and experiences on this? Leave a comment below. If you are considering using your existing limited company for contracts inside IR35, then you really need a robust accounting and tax system. If you've been operating outside of IR35 historically, then a combination of contracts inside and outside of IR35, whether simultaneously or sequentially, will need careful bookkeeping and financial management to ensure you don't mix apples with oranges. If you're not sure where to start with this and you would like more information for your own specific circumstances, then head to our website where you can book a free scheduled call with one of our qualified specialist accountants. So let's recap. With the impending private sector off-payroll IR35 rules coming into force from the 1st of April 2021, you can still use your existing or even create a new personal services limited company for contracts inside IR35. In my professional opinion, it's only viable to do so if you are going to get contracts outside of IR35 too, whether simultaneously or sequentially. You can use your existing personal services limited company as a stepping stone to a full small trading business in its own right. And umbrella companies are an alternative for inside IR35 contracts, but are quite often a short-term solution, unless of course your client or agency insist upon it. Finally, no two scenarios are the same, so remember this is just general advice. I hope this video has helped you understand how limited company accounting and tax works for inside IR35 contracts and has taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe as this really does help us get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.